think about real estate is not a get rich quick.
Sure.
Real estate is get a real rich slow.
Yeah.
Get real rich slow, right? 90% of all millionaires in America came through real estate, but it took them a long time to get there. A lot of people don't know this. You know how Arnold Schwarzenegger, he bought a duplex, then he bought a fourplex, then a 12plex, and lived in it. That's how he managed to. Just think about it. Now he's multi-millionaire, and but his foundation was he knew that he needed to buy cash flowing, appreciating assets, but he kept the day job, let the assets grow, and then. And so a lot of people just don't understand that. And again, I know your group is mostly accredited investors, but if I was 20 years old starting over, I'd be doing the burr and the house hacking.
Sure.
I got a friend who did that. He was 22 years old and owned a fourplex and slept on the floor, and he just bought an eightplex.
You're listening to the Accredited Investors Only podcast presented by Accredited Life.
Trevor, welcome to the show. How you feeling today?
I am excited to be here. Thanks for having me.
Hey, I'm happy you're here and excited for this conversation. Why don't we start with you introducing yourself? Who is Trevor? What do you do? Why are you here? All that kind of stuff.
Yeah, so my name is Trevor. I'm from Niagara Falls, Canada originally. I've been in the attractions and entertainment business most of my life. So actually started at age 13 working for Ripley's, believe it or not, on Clifton Hill, for those of you that have been there. Worked there all through high school. Then I switched and I did 18 years with Guinness World Records. Always kind of interested in real estate, but never really did anything. Then I decided I needed to come to America, the land of opportunity, and where better to go for tourism than Orlando, Florida. Originally wanted to open a Guinness World Records there. I did not get the rights to it. Strangely enough, opened a year-round haunted house, of all things to open. And then I got recruited by a company called I Fly Indoor Skydiving. And I stayed there for 20 years and I opened 46 of 80 locations all over the world. I was always interested in real estate investing, but to be honest, I was terrified of toilets, tenants, and trash. I also believed I had to become a millionaire before I could invest in commercial real estate. Big mistake. And actually, iFly got bought out, so I got a significant payday. So I thought, okay, time to get serious about investing in real estate. Wasn't really sure way to go. My third seminar I went syndication into multifamily real estate. Where have you been my whole life? This is what I've been looking for. And the rest is history.
Wow. That sounds extremely exciting. Is working in that kind of entertainment attractions business, is it as exciting as it sounds? Or I'm sure work is work, right? But
every job work is work, but you got to think about it. I open locations like Sao Paulo, Brazil, Brasilia, Queenstown, New Zealand, Brisbane, Australia, Melbourne, Perth, even Calgary, Canada. I hadn't been there as a Canadian. So it was super exciting. But again, just like everything, work is work. When we opened a lot, my record was 256 days on the road one year. So I traveled a ton, but I loved it. Because I became passionate about it. And to be honest, I got let go during COVID, and I never thought I'd find something else I'd be this passionate about.
sure.
And now all of a sudden, this finding out about real estate and syndication and creating financial freedom, I gotta say, I'm equally or more passionate about getting the message out, which is why I'm so happy to be here.
That's awesome. I think the passion is such an important part, and having this show and just being in the business as long as I have been, I've talked to so many people over the years, and sometimes I think that light goes out over time, and it's a shame, because I think it's a great business, and there's so many different flavors and all. It's like if you start to feel not as excited about what you're doing or something like that, there's so many different things you can do in it. But yeah, somebody coming from your background, doing what you're doing, opening up places like that, where I could imagine like being there when they open and seeing the excitement on people and kids and stuff like that. I used to love haunted houses when I was little. I still do if I can get there. And so yeah, competing with that had to be difficult. What
Well,
was
it was, and so not only that, and I referred to it as delivering the dream of flight. Like how many of us dreamed we could fly, right? How many of us wore capes and ran around, right? But on the other side of it, the people that we hired, we were giving them a dream job. It was really I had no concept of that when I first started out, that the passion and the energy and the fun and of course it was so realistic. Actually, out of the 80 locations we opened, 10 of them are for military. We have one in Yuma Proving Ground with American Airborne practices skydiving. It's so realistic. And then we flew kids as young as 3 years old. Just an incredible journey.
Wow, that's amazing. Well, wow, I have so many questions, but I'm curious to hear, what brought you into the real estate world. Do you remember like what the catalyst was, and then what were the early days like?
So I was always very interested, as I mentioned in my beginning, right? And some of the folks that I partnered with, and then with iFly, even looking at locations and doing things. And my partner that helped me open up the haunted house, still great friends with him. And he was like a real estate tycoon. Like he would buy a piece of property on International Drive, do a double closing the same day, and keep like 2 acres at the front for retail and sell the hotel, and in theory get the 2 acres for free on his double closing. He was super creative, and I just always was interested. But as I said earlier, I thought only millionaires could play there,
Mm.
and I was terrified of toilets, tenants, and trash. Like I thought I get ripped off when I get my toilet fixed. Why do I want to make this like something I do?
Times
So
that by 10 or 20. Yep.
yeah, I was frozen. And then, as I said, iFly got bought out. I did have some capital after that. I got a nice payday. And I thought, that's it. You've been talking, I'm 58 years old, so waited way too long. You've been talking about this forever. And I went to like, 3 different seminars over weekends. The first two, I could tell they were just schemes. Then the next group, they just talked about syndicating value add multifamily.
Okay.
And it was like, hold on a minute. Like I can put only $50,000 into a multi-million dollar deal. I actually own a piece of the real estate. You're going to let me learn while I'm earning money. I called it learn and earn
Mm.
because invested with people that really were interested in helping me understand. And then, to say I got hooked was a little bit of an underestimation. So in 6 years, I've passively invested in 20 syndications and a general partner on 12. So a total of 32 in 6 years. You could say I jumped in with both feet. I switched to the active because I got let go with iFly indoor skydiving, and I thought, okay, I'm a 60-something-year-old man. I don't want to go get another job working for some 20-year-old MBA.
Mm.
And so that became my mission to get, people to understand the power.
Yeah. Wow. What have you learned on the LP side of the business, investing passively in other people's deals and things like that? What do you look for? What gets you excited? What makes you run the other way? All that kind of stuff.
Yeah, so at the very beginning, I had a very simplistic philosophy. If it sounds too good to be true, it probably is. My mom has taught me that when I was a young boy, and so I became very skeptical. Like, don't tell me you're going to triple my money in 2 years. Don't tell me this. So I started looking for reasonable returns, and then I started looking for people that I could know, like, and trust.
Mm.
And all of those things were, did we get along? Were we aligned? Would I like to be in business with you for 5 years? Are you going to provide me an opportunity to learn? Especially at the beginning, I was very interested in learning. And then I wanted to look for what I'm going to call synergistic returns. So most of my investments have a proportion of them.
Mm.
So until I get paid 7%, the sponsorship team doesn't get paid anything.
Mhm.
Then there's the split after I get my base and I get paid first. Then there's a split. And I actually love a waterfall split. So if the
Mm.
deal does even better, I do better. Like
Mhm.
I'm in one deal where if they double my money, it goes to a 50-50 split. And I'm like, baby, double my money. Like that's fine with me, right? I love this concept of win-win.
Sure.
Yeah. And then it's
First, the deal goes good, I get paid a little bit more, you get, and if the deal goes great, I want you to get paid more. I want to invest with people who are also doing this to make money for themselves along with their investors, to create some sort of synergistic environment with their tenants, with whatever. So those became very important to me. Clearly there's no hiding. We've had some pretty serious challenges in the last couple of years.
Yeah.
And unfortunately, I've been a victim of some of the things that who'd ever thought that, a deal I invested in at 3.5% interest would be 7.5% interest. And the mortgage payment was like 70% of the income coming in, and they got foreclosed on. I mean,
Well,
who'd ever thought that would happen? So even more to build on the who, right? So somebody who, first of all, has as much to gain or lose as you do, somebody who's local and understands the market, somebody, and everybody says, nobody ever calls up, says, hey, would you join my webinar? And we got these wild, crazy projections, but you need to believe in us. No. And then everybody says, oh, they're conservative projections. Well, let's see if they are, right? The days of, 30% rent bumps are probably gone. They were here for maybe a couple of years. I think they'll come back again, but just making sure that the basic fundamentals are there. And as a passive investor, you can do some research on your own, right? Average rents are $1,000 an hour. We're going to move it to 1,300. All of a sudden, my spidey sense starts going up, and I start looking at what's the income in that area. How are you going to get 30% more? How are they going to, what kind of tenant base do you have to turn? And they'll always list you comps, but just put them all on a Google map and look for a couple in the middle and just verify those comps. It's little things that you can do just to, sniff test it, I call it.
Yeah, that's a really good way to put it, and it makes it less intimidating, because I think that's probably the underwriting analysis side of the deal can be something that people can get really lost in, and maybe even not do it at all, and just fully trust the operator and the team. And to a certain degree, you have to trust who you're investing in, and you got to feel confident that, like you said, like and trust them, all that kind of stuff. But at the same time, it's always good to go that trust but verify route,
Ultimately, yeah.
Right.
And then, the best deal I had to date, it's not because I'm all that smart, right? The best deal I had to date, I actually followed that group for 1 year.
Okay.
And they were super transparent. I said, would you mind sending me the updates on your 3 most recent deals when you send your investor updates on? Just let me look at them.
Mm-hmm.
And I was shocked. Like 2 out of 10 said yes and 8 said no.
Oh,
And I'm like, okay, well, have a nice day. Thank you.
It's weird, yeah.
Pardon me?
That's weird. I would say, I'd love that
And
opportunity.
then, would you, and then I actually went to one of their webinars that they talked about a deal that didn't go good.
Okay. Mm-hmm.
And a lot of people said, oh, why would you do that? And I went, no, I'm so happy you did that because you've learned the lesson on somebody else's nickel. Let's hope you can apply the lesson when it's my nickel and I can do better. So that honesty and that transparency. And when I had a question, I was very careful when I joined webinars and things, not because I wasn't an investor. So I would ask them privately. I had a question, but I don't want to bring it up in front of the group, right? Because it goes both sides, right? If you want people to give, you gotta be willing to be professional. And I'm so glad I did. And again, no like and trust. They tripled my money in 20 months, so I was pretty happy.
Mm-hmm.
My money came in at 9:30 a.m. and left at 10 a.m. to their next deal. Okay, because why? History. Now, that deal, the dynamics in the market are slightly different. We still have, it's been a little more than a year. There hasn't been a distribution, but they're still they're reporting on all the proper fundamentals, and I believe it's still going to be good.
Yeah, I like the word fundamentals. I really think, and that's a theme that comes up a lot on this show, and I talk about it a lot. I think sometimes people you kind of look past, things, and you're looking at so many other things, and so much of the content out there can be, very complex and all because it sounds good and it makes you look
Yeah.
smart, all that kind of stuff. But the fundamentals are what makes and breaks you at the end of the day. And it's funny because they're somewhat simple. Like you said, verifying comps and things like that. It's just asking the right questions. Popping in, being consistent and all that kind of stuff, and listening to people. And these are just fundamental, simple things. They don't cost any money to do it. It's not like you got to go buy John Burns data or something like that, or these are just simple things that you can do. And there's another thing I wanted to talk to you about was the compounding effect and all that. But the fundamentals with what you're talking about now, like those are things that they compound, and over time, it just allows for you to make smarter decisions, learn from any mistakes you make, learn from the kind of wisdom and mistakes of others, and things like that. So I'm curious to, you've been investing on the real estate side now for a little bit, right?
Yeah.
It's a couple years under your belt there. How has the compounding effect helped you? And what
Well, not
kind of,
quite there, right? Because if you think about it, most deals are 3 to 5 years. I've been investing for 6. But I always like to tell this story. You're a much younger gentleman than I am. I didn't start till I was 58, right? But I want to talk about the power of compounding. So most deals in general, the goal is to double your money every 5 years. So I'm going to do a little math lesson. It assumes you double. It assumes you have no tax complications. 100,000 turns into 5 years. You invest 2, it turns into 4. You invest 4, it turns into 8. You invest 8, it turns into 1.6 million. You invest 1.6 million, it turns into $3.2 million. Again, I'm assuming you double. I'm assuming you have no taxes. A lot of assumptions.
Sure.
But $100,000 investment compounded in 25 years to $3.2 million. That's how you become a millionaire in real estate investing. Remember, it's not you're going to be a millionaire in 1 year. I'm talking 3 years, right? There's a 3 millionaire. And even, even on your whatever, you're at it, right? So if you could take that mentality, okay, first of all, I mentioned Warren Buffett earlier. Let's talk about that. If you don't find a way to make money while you sleep, you will work until you die. So your job, you trade time for money. Your investments are you put your money to work. You go to sleep, and all those little dollar bills go to work while you're sleeping, and it grows. But if you wake them up and put them back in your living, so if you invested 100,000, said I'm going to live off of my cash flow, guess how much money you'll have left in 25 years? $100,000, because you kept living off of it.
Yeah.
So again, you want to keep feeding these investments and get that compounding really starting to hum, because who listening to this, just taking 100 and turning it to 3.2 changes everything in your life. Everything.
Sure.
I mean, everything, right? Again, money's not the answer to all, but again, if it could just go to work for you, if you could consider that, and it's going to go to work for me, and I'm going to leave it working because it works 24/7. And if you can do that practice versus saying, well, I'm going to live off the cash flow, I'm going to do that. So I'm one of the few folks that say, actually keep your job as long as you can.
Yeah.
And then until you're at a position when you can invest and you can be part of the general partnership team and make money off of, in theory, general partnership teams, you make money off of other people's money. So now it's a double compound, right?
Sure.
So for me, my goal is to keep my money working, and I'm actually living off of what I get on my active side, as well as creating a little bit more on my net worth.
What lessons would you say that you learned doing what you did for so long in the entertainment and that business that you've brought with you into this
Yeah,
business?
so it's very interesting. So several of our locations were franchise locations, and we bought them, and we did the value add model, right? So they were operated by unsophisticated business operators. We knew everything. We had all of the systems, all of the techniques. We had the capital. So there was one location, that was just basically breaking even. And we bought it, we rebranded it, we did some improvements to the facility, we did a lot of improvements to the system and the team, and we grew what was called EBITDA in the business world. In the real estate world, it's called NOI. They're the same things, okay? And so we grew it. And of course, when iFly was bought out and I got my payday, it was a multiple of our EBITDA, right? So on that one, I think they got like a 8 or 9% multiple. But if you don't grow that bottom line, and at the end of the day, all of this is still customer focused. That's what the people you invest with, pardon me, need to be customer focused. So if you're an apartment complex, your tenants are your residents. Actually, I get corrected by some people. Don't call them your tenants, call them your residents. And it's very true. They're your customers. If you have a new build retail, we do retail a lot. The people that are the tenants within the location are my customers. And I need to create an environment where people in my apartments feel safe, secure. It's a better place to live. I need to provide an environment where my retail tenants, they've got great access. We keep the facilities looking nice. We maintain everything, no matter where it is, right? I've got an investment in a medical center. Again, we have to have good facilities, good doctors and practitioners in the facilities so that they'll pay the rent. The whole thing was oddly very symbiotic that it's so customer focused.
I like that a lot. Yeah, I knew there would be crossovers there, and I always think it's important too for the listeners that are maybe getting into like or where you're at, where you were at, years ago. That it might be intimidating, or you might think there's a lot of new things to learn here and stuff like that. There certainly is, and some of that is just going to come in time, but there's definitely things that you've done in your life and you've had experiences and things like that that are that you could take with you that are going to help you and all that kind of stuff. I think that's very important. It's equally as important as the foundational kind of things we were talking about before, to take time and look at yourself foundationally, look at the skill sets you have, what you're good at, what you like to do, all that kind of stuff, because it's going to create just a lot less friction moving forward when you find yourself doing things you don't necessarily want to be doing, like you were saying with tenants and toilets and things like that. It's like if you know yourself, it's going to lead to just making everything a lot easier and a lot, you're going to know who to put in the right place and all that kind of stuff. You brought up something about your, the retail side and medical and things like that. And that reminded me of a question I wanted to ask you, was to paint a picture of the portfolio now and what you've invested in. Cause I thought maybe it was only multifamily, but I had a feeling you probably did other stuff as well. So let's talk about that.
The majority is multifamily because that's where I cut my teeth. And on multifamily, I'm everything. So I am, C minus workforce housing, total forced appreciation to, well, sorry, I should even, so I've done that. I've got a couple that are in the B class, kind of the one that did the big investment or whatever. And so for those that don't know, that's nicer apartments. I've also done A class development where the syndicator bought a 300 unit from the developer. So what happens there is a different business strategy. So as a developer, I buy the land, I build it. I try to fill it as quick as possible because I want to get out. So I've got a lot of concessions, a lot of discounts, a lot of things. Then as the secondary buyer, you burn off the concessions. So we start trying to sign at market ranks. We start trying to do things that we go from normally 80% occupied to try to get in the low 90% occupied. I've also invested in a brand new A-class build. And I've also invested in a piece of property that was going to be built. So I just did a land entitlement investment. That's where you basically, you take the money, the group bought the land. When they got it entitled, you could stay on the journey to the new build, or you could get out of the journey. So there was, again, so they bought the land, got it entitled. Then I've invested in where they had that done already and they started building. They sold it to an operator to, so all of those different classes.
Yeah.
And then I have a medical investment, again, through friends and through connections. And it's a very unique investment that basically they own a medical center for those of you that don't know much about it, it's a double guaranteed triple net lease, which means the tenants pay all of the expenses. So the doctors in the business, and there it's actually guaranteed by the practice and personally by the physician. So it's kind of like the guy has to lose his practice and his home and his Porsche before he stops paying your bills. So again, it's a little less of a return, but I'm happy with that. And then I've invested in a new build storage, and it was the one, right? So they bought entitled land. They got it, they built it, they're leasing it up now. And that was the one where they're going to lease it. They're going to do a cash out refi. Then when they reach the 50% return, it goes to and it's like a 7 to 10 year investment. So all different timelines. Then I've invested in new build retail where we buy an entitled piece of land. Then we build the retail, we get the retail leased, and then we sell it to someone else who's an operator. So I've been involved in all of those different levels. And I like to talk to people about their investing strategy. So you want to make sure you have some sort of strategy. You want strategy around asset class, location. So again, my asset class is a little bit mixed, but still very multifamily focused. Location on Texas, Arizona, Colorado, North Carolina, Georgia, all pro-business, pro-landlord states. And then I'm in different timelines. So some are 3, some are 5, some are 7, some are 10. And so I call it like, I'm not a big baseball fan, but I love the analogy. If you go to the base with the intent of every batter that comes up is going to hit a home run, that team will never win the World Series. So you need
the Phillies lost.
somebody on first, somebody on second, somebody on third. Then you take your other one and you want to hit a home run. So the one that tripled my money in 20 months, that's the grand slam, right? All the bases were loaded, but you want to have that mixture. So again, mixture sometimes can be even in the level of returns. My medical one, it's just a 10% pref. There's no upside. Perfect place though for my retirement money. I just, if I'm going to get 10%, I'm happy, and then some of the developer ones are also good for retirement money because you can't use the tax incentives in your retirement plans that you can with multifamily. Plus little dividends of cash coming in don't help me, right? I've got $6,800 in my self-directed retirement. I can't do anything for, if I get something goes full cycle, right? It's just sitting there. So moving your money along, right? I put it in 3 years later, I may get a 1.6 multiple. And then, put 100,000 is 160. Now I can do 350 investments. I can do 275s, gives me all the options. But it's super important that people consider this balance.
Yeah. I think that's awesome.
And again, with 32, it's a little easier, right? When I first started out, my first 7 were all multifamily.
Yeah, I'm sure like some of the seminars you did and things like that were geared towards multifamily helped with the confidence, that kind of thing. God, I have so many questions around that. The first that comes to mind is like, what have you learned over time now that you've kind of dunked into a few different asset classes and then different strategies? Will you continue to do that, or was there anything that you maybe said, it looked better on paper or whatever it may be than what the reality was? Or will you continue to look in medical and retail and development and value add and core plus and all that kind of stuff? Or what's that look like?
Yeah. So right now I'm looking at a little bit more of an adjustment just because of the market cycle we're in. So I'm looking for a little more new build development, a little more medical, maybe some storage, just because there's a lot of pressure in the multifamily space. And I'm already pretty highly leveraged in the multifamily space. So so again, that's just me personally. Doesn't mean, don't run out and do it. It's a bad time to buy. It's never a bad time to buy, right? It's just there's all kinds of good deals out there in all the different asset classes. And again, remember I talked about picking the who. So in fact, she just texted me while I was working here. There was a friend of mine. She's presented like 6 investments to me. I really wanted to invest with her, but they were all what I wasn't looking to do. And I was looking to do an investment with her. She joined with a team that I knew, liked, and trust. And it was in North Carolina and Charlotte where I wanted to have an investment. So it was like, okay, I've been watching her for like 2 years. I wanted something in North Carolina. I wanted something in Charlotte because my brother works there. So now my company can fly me out to visit my brother, and I'll go take some pictures of my storage unit and do a tour. And don't hopefully IRS isn't listening. I think they all got laid off, so we're good. uh, but these different things. So again, you want to have some sort of plan, right? I didn't want to buy somebody else's old storage unit and try to automate it. I didn't want to be in the value. I wanted to be in the new build space. Again, I like they have a very strong local team. This is their third develop, and they've done some multifamily. They've done some new build housing. They've done, and they're nice guys. I've met them in person a couple of times. So just everything lined up. So again, you'll never run out of deals. You'll run out of money before you run out of deals. So
That's a good way to put it. Yeah.
be a little bit more patient and just, and just look at what can I do?
Yeah, I like that mindset, and it sounds like you're taking a long-term approach too. I mean, a lot of times I see people who have a really short-term approach. They're always like trying to time the market and stuff like that. And I just think that's a challenge, and then it's like years go by and they're still on the sideline, that kind of thing. And to your point, if there's good deals in any market, you just have to find them, and the specifics of the deal just have to make sense. The story's got to line up and all that kind of stuff.
Well, and think about real estate. Real estate is not a get rich quick.
Sure.
Real estate is get a real rich slow. You get real rich slow, right? 90% of all millionaires in America came through real estate, but it took them a long time to get there.
Sure.
A lot of people don't know this. You know how Arnold Schwarzenegger, he bought a duplex, then he bought a fourplex, then a 12plex, and lived in it. That's how he managed to go. Yeah, just think about it. Now he's multi-millionaire. And, but his foundation was he knew that he needed to buy cash flowing, appreciating assets. But he kept the day job, let the assets grow.
Yeah.
And then, and so a lot of people just don't understand that. And again, I know your group is mostly accredited investors, but if I was 20 years old starting over, I'd be doing the BRRRR and the house hacking.
Sure.
I got a friend who did that. He was 22 years old and owned a fourplex and slept on the floor, and he just bought an eightplex.
Yeah. Yeah. That's what I was my first property. I think it was 23 or 24, and it was a duplex, and got it with an FHA loan. I think out of pocket was, less than $5,000, and lived in one unit, rented out the other, and still own that property now. And it's great. I think that's a great strategy.
Yeah.
And definitely for people just getting started, and to be able to utilize the bank, 30%, 30-year fixed mortgages and all, it's a great way to do it.
Yeah.
So what made you want to transition to the general partner side? I know you mentioned a couple different reasons why, but I'm curious to hear it again.
So the biggest one was I got let go. So if I was, if I was still, I might be still doing iFly because I loved it and it was great. But when I did, I had to make a decision, and my decision was, okay, I got let go during COVID. I do not want to go find another job because, again, it's a big difference. You've had a job for 20 years, you know what you're doing. And I still, don't get me wrong, I still worked hard. I still worked 60 hours a week, but I could take calls. I was flexible. Before that, we were all working from home, so I could continue to slowly get in there. I call it, I was looking over the cliff, wondering what to do, and somebody came behind me, called COVID, and pushed me.
Yeah. Wow. And so what have you felt has been the biggest transitions? Are you partnering with people, or
So I did
look like?
3 deals outside of Massive Capital and with Massive Capital, and I've done 9 with Massive Capital in the last 2 years. And my role with them is Vice President Investor Engagement. I basically look for investors. I educate people on investing. That's my role within the group. And within that group, we've done a couple of asset classes: value add, multifamily, new build, retail. We're doing our first industrial development. So yeah.
That's amazing. Where are you finding investors? Where are you finding people?
That's hard work.
Isn't
It's
it?
hard work. I hope at least 3 people saw me from this podcast and say, "Hey, we saw you." It's hard work. I'm not going to lie. I spend a lot of time on social media. I spend a lot of time going to events. I spend a lot of time. And then in fact, I mentioned earlier that I did join a mentorship program here in Texas, and I've been there with them 6.5 years almost, and them and Massive Capital have kind of merged together. So I'm actually going to be one of the coaches within their commercial group that will give me access to their whole database. Because again, I had access to some of it where they would invite them to a webinar, but now I'm the guy that's training them once a week on a class and inviting them to the webinar. So my know, like, and trust goes up a lot.
That's awesome. Yeah, it's tough, and I think raising capital now for over 10 years, the business has changed dramatically, and social media has changed it where it's easier to get yourself out there, but because of that, there's more competition than ever before.
Yeah.
And too, there's so much uncertainty in the market and the economy and election year, and now with everything,
It's crazy with the election.
people don't know what to think, right?
Everybody said, well, let me wait and see who wins.
Yeah.
Let me wait till he gets there.
Yeah.
Oh my goodness, when are we going to stop changing?
Yeah, exactly.
Like,
Exactly.
I feel like I'm on a roller coaster that I can't see if I'm up or down. So
Yeah,
the
there's
billion,
no
that
time.
the sediment is again, and never in my lifetime have I seen so much negativity in the press.
Sure, without a doubt. Without a doubt.
That creates a lot of uncertainty.
Yeah.
No matter what side you're on, where you're at, negativity over and over again, which is why, again, my goal is to stress, hey, find people you know, like, and trust, educate yourself, and do deals with your friends.
Yeah. Yeah. And fortunately too, I feel like a lot of accredited investors, they're savvy enough, that they're smart enough, they've been in the business long enough, and that they understand you can't believe everything you hear, and a lot of them understand you have to take a long-term approach too. And that kind of helps, I think, get rid of some of the short-term, uncertainties and things like that. But it's hard, when you're just getting bombarded all over the place and articles and content, whatever, you can't get away from it. So it definitely, and that uncertainty, I think, leads to inaction for a lot of people. So it's interesting. It's certainly, it's been a challenge, but the raising capital obviously is such an important part, being well capitalized to take advantage of opportunities, and to be able to do what you have to do, and you do find an opportunity and all. It's such an important aspect of the business. So you're doing some hard work there, without a doubt, and it's a new challenge for you, right?
What's that?
It's a new challenge for you.
It is. I love it though.
Mm-hmm. So where do you see the future for massive capital, for yourself personally, between LP and GP investments and all? Where do you see things heading? And what is there anything that you would suggest to anybody from an asset class perspective or strategy perspective that you kind of like, that you're leaning more into now? Or
So the biggest advice is, do not take your money out and sit on the sideline.
Mm.
Do not. You got to keep your money moving.
Mm.
Okay. It may just not move as quickly or whatever, but if you pull your money out and stop, you're only going backwards. Now, yes, it is a little bit scary. There are some deals that are, struggling and doing different things, but do not sit out. Secondly, every cycle has great buying moments, right? There was 2008 was horrible. Again, it was mostly in the single family space, but it was also the period of time that one of the greatest wealth creations of America happened.
Sure.
So this stress right now, still, yes, residential is certainly hurting, but it's not hurting because it wasn't over leveraged. There's all the things. It's just
Sure.
affordability factor right now.
Yeah.
Okay. And how that will balance out. I mean, I live in Texas, and I think, how in the world does somebody live in California? Like, my house in California is worth, 5 times. How do they live there? I don't get it. But eventually they figure it out, and they do. So I believe that we're again, I'm not an economist, but I look a lot. We present a lot on it. A couple of the guys in our group are super, super on target. I think we're heading back up. And what happens is a lot of people wait till you get all the way up and then invest again. And everything that's left is a correction. So you've got to be able to get some of the ride up. So Rockefeller says the best time to even if there's blood in the streets, still the best time to buy real estate, even if it's your blood. I think I just quoted him, but
No, I know that quote, the essence of it and all. And
even if it's your blood, some of it's your blood, it's still the best time, right? And you know, Warren Buffett, you know, talks about the tide going out, right? You don't know who's swimming naked till the tide goes out. Well, a few people got caught swimming naked. So learn from that, learn what you can about, and some of them were just, you know, just bad luck. They weren't bad people.
yeah, that's definitely true. And to your point, I think it's like if you feel yourself getting into the herd, you that's the time to maybe step back, back and question what you're doing, right?
Yeah. But you got to keep that money moving.
Yeah. Well, to your point with the compounding, you know, effect,
to keep that money
pull it
moving.
out. It's only going down. So how can people learn more about Massive and just learn more about your story? You know, you have a great story. I think, you know, for you, you can really connect with accredited investors, and you know, you've been on both sides now, with the LP side, the GP side. You've been in a lot, it sounds like a lot of different deals with different operators and things like that. So I'm sure people would want to reach out and just learn more about your story.
Ways to find me is LinkedIn, and I forgot to update my name on here. So you got to do the K. K stands for Keith, by the way. I was never called Keith, but my legal name is Keith. So go K Trevor Thompson. Look for me on LinkedIn. Tell me you saw me on Peter's podcast. Love to connect with people. There's a link to book a call on my LinkedIn profile. That's the best place to find me. But you got to remember the K. So
okay, awesome. Well, Trevor, great talking to you. Great conversation. I really appreciate you taking the time, and I just want to thank you for being here.
I really enjoyed it. Thank you.